Emotions rule on Valentine's Day, but can they rule your investing strategies? Joining me now is Erik Davidson. He's the Chief Investment Officer and Executive Vice President at Wells Fargo. Erik, nice to meet you. Welcome to our program.
Great. Thank you, Danielle.
So some investors, as we know, follow their heart and invest in what they love. I hear this more than 1,000 times in a week. So how does your research find this strategy? What do you say when you hear this?
Sure. It's very understandable as humans that behaviorally we are wired to follow our emotions. Over generations, we've been designed to be herding. Our herding instinct and our survival instinct is very, very strong. And we constantly hear the very wise adage to follow your heart. I mean, who hasn't been to a graduation ceremony where the commencement speech hasn't been summarized by follow your heart? It makes great sense romantically on a day like today, Valentine's Day, or it makes great sense academically or vocationally, but financially, following your heart will betray you every single time, and the research shows that.
Right. So you want to take the emotion out of it when it comes to picking stocks.
Yes. And the research shows, unfortunately, that whether we're looking at consumer confidence or investor confidence, that when spirits are high, when we're bullish, oftentimes the subsequent market returns can be quite poor. And conversely, when we are most despondent, when sentiment is most bearish, the subsequent market returns can do quite well. And we saw that, just recently when we almost hit a bear market with the U.S. stock market down 19.8% on Christmas Eve day. And yet now we've bounced in 6 weeks or so up 17, 18%.
But Erik, would you not say it's important to differentiate between saying invest in what you know versus invest in what you love? Like the two are fundamentally different, correct?
Right, and I think that's a really good point. Invest in what you know, do your homework, do your due diligence. That's really, really important. But, investing upon how you feel, and unfortunately that's, and understandably, that's how so many investors do invest is, how do I feel about something? And that's right. And actually kind of a general rule is, listen to your heart really, really carefully, and then do the exact opposite is probably the best strategy from an investment standpoint.
So would you say market sentiments are they not a good indicator for you?
The research actually indicates that market sentiment is a contrarian indicator. So when market sentiment is high, bullish, likely the market is about to head into a downturn conversely. And you can just look at, in our own lives, recent bubbles, whether it's, the tech bubble or the housing bubble or, the gold bubble of a few years ago or the most recent Bitcoin bubble. All of those were precursors to significant declines. And when we were most despondent, think of 2002, 2003, think of 2009, 2010. Those were precursors to the market doing very, very well.
Well, you mentioned gold, so I'm going to ask you now, what's your sentiment on the gold market? What's your outlook here?
Yes, we're actually within our range, maybe more towards the top of our range for gold. But there might be a bit of a tailwind in the sense that we do see some weakness going forward in the U.S. dollar, and obviously the inverse correlation between dollar and gold. That could help a little bit. So there could be some more room to run for gold. We think that overall, from a more strategic perspective, we think that precious metals are a very important part of a diversified commodities exposure. You'll also want to have, agriculture and energy in your commodities exposure. And that in turn is a very important component of a prudently developed, diversified investment portfolio.
And Erik, before we wrap here, so if I had to ask you, solid advice here for investors watching. So we know, take your heart out of it. Anything else?
Yes, I think it's really the first question that investors need to ask themselves is not, should I invest? Should I not invest? Is this a good investment? Is this a bad investment? The first question investors need to ask themselves is, where do they want to go? Nobody walks out to their car in the morning and say, where am I going to drive today? Or nobody goes to the airport and say, hey, where should I fly? You've got to know your destination. And that destination determines your investment strategy. So if you have a short-term financial goal, have a short-term investment strategy. But most people have longer-term financial goals, and they probably should should have a longer-term financial strategy.
I couldn't not have said it better. Thank you so much, Erik. Really good advice there. Thank you so much for joining us.
Right. Thank you.
And thank you for watching. We'll have much more for you tomorrow.